So I'm a little bit one class in arrears on posting that, but I will go ahead and do that. Okay, so the first thing I want to do before we get into the government financial analysis discussion is take a look at this material that talks about the consolidation process. Remember, when we looked at our transactions mainly in some of the other chapters, really starting, I think, pretty much with chapter 4, we looked at a set of journal entries that would be consistent with the fund financial statements, then looked at that same transaction, say a fund financial statement using modified accrual like the general fund. And then we would look at that same transaction, say, well, here's how it would be recorded if you made the journal entry to prepare the government-wide statements. But we kept going back and saying, well, the reality is, and I think Carmen and everybody confirmed that for the city and for most cities, there would be entries made at the fund level, and then there would be a set of worksheet type journal entries that would be made to convert and consolidate the individual fund statements, converting the governmental funds from modified accrual to full accrual, bringing in the internal service fund information, which is essentially a proprietary fund at the fund level, but is included in the governmental activities column at the government-wide level, bring that information into consolidated in with the government-wide statements, and then governmental activities column, the government-wide statements, and then there would be a series of, and pretty common that you would see in any consolidation, a set of eliminating entries. And all of that would really take place on a worksheet. And then you would have on the far right, if you are imagining, you would have the government-wide statements that would be presented. So what I want to do is, since we've sort of talked about that a little bit, is just go through this. And I took this information from Becker Professional Education. That's the material that Golden Gate uses for our financial accounting and reporting and our business accounting and reporting courses that I teach. And so I thought it would be okay if I use this information for our purposes tonight. And you can see that I have posted this PDF of information that I took from the textbook that folks use to prepare for the CPA exam, taking our accounting. This particular class would be accounting 381. Okay, so let me go ahead and I'm going to put my machine in tablet mode and hope that it doesn't give me too much kickback. Okay, so let's go ahead and see if, and I'm not even sure how necessary that is, but it would be nice to have it in tablet mode and not have it mess up on me. But that's not going to happen, is it? Okay, guys, you know the drill. At least it's somewhat reassuring, I guess, to know that the problem is persistent across different software, because I'm using a different software for this and it's having the same exact problem. Okay. It's okay now. So let's see if I put it to full screen again. Okay, good. All right. So a little less cumbersome than in past classes. So anyway, we take a look and we have this comprehensive illustration that I jumped to, and in this information. And notice we have our fund financial statements. So we have our balance sheet for our governmental funds using modified accrual accounting. Notice, guys, current assets, only current liabilities, right? Our fund balance, things like our deferred inflows, etc. Then we have our statement of revenues, expenditures, and changes in fund balance, our revenues, our expenditures, all on the modified accrual basis of accounting. Notice that we have for our debt service, we have expenditure relating to the principal, right? Payback of principal is treated as an expenditure. Purchases of capital assets, right? All of these things treated as expenditures under modified accrual accounting. Notice that we have our excess of deficiency over revenues here. And then, as we've been talking about for our governmental fund, statement of revenues, expenditures, and changing fund balance, we have that bottom part, which is really containing our other financing sources and uses. Notice here, guys, that we have the transfers in and out from usually they come from the general fund into another fund. I think in this example, it's going to the capital project fund, or okay, maybe the debt service fund there. Keep my column straight, okay? And then you can see that when long-term debt is being issued, okay, that's being treated as an other financing source. And so when we have our net change in fund balance, that's increasing our fund balance and then generating the ending fund balance once we add that to the beginning fund balance, et cetera. Okay, so we've been working with this. Then we got to our proprietary funds. We're not going to talk about the enterprise fund here tonight, guys, because it simply would be what? An adding up of columns across the various enterprise funds, and then that would all be consolidated into the business type activity column on our government-wide statements. So we really don't need to spend much time with that. But since the internal service fund as a proprietary fund needs to be consolidated into the governmental activities column, we're going to see how that would be affected. And they basically show us the financial statements, although we don't need to convert from from modified accrual accounting to full accrual here. We do need to move some things around and eliminate some profit that may be contained in the internal service funds, since the customers of the internal service fund are the other funds. And since we're not Enron or any kind of company that's engaging in financial shenanigans of the sort, you can't generate revenue out of entities that you can control, right? And so, we'll have to make some adjustment for that. Okay. Now, remember, even though our proprietary funds prepare a statement of cash flows, we don't need to worry about the statement of cash flows for our proprietary funds, since those are only reported at the fund level. And we don't have to worry about consolidating in the fiduciary funds because they are not reported at the government-wide level. Okay. And then this problem gave us some additional facts, just giving an example, maybe how a CPA exam task-based simulation might look, although to be honest with you, I think this is well beyond the scope of any real potential task-based simulation that the CPA exam would even provide. But I think that it is useful for our purposes to sort of, see how maybe there'd be some records that the county has, that the city has, that would give us some additional information, such as what were the capital assets, the non-capital assets that were on hand at the beginning of the year, any non-current liabilities at the beginning of the year, interest payments that should have been accrued under full accrual accounting that were not under modified accrual accounting. Remember, we talked about, hey, interest is an expense under both modified and full accrual, but we don't do what? We don't accrue interest at year end under modified accrual. Under full accrual, we would. Remember, I showed you there was that little entry where we took 1 month worth of the interest, then that would be reported as interest expense at the government-wide level using full accrual. And so this question just giving us what that amount is, we maybe would have to compute that for our purposes. But you can see then that they talk about depreciation expense. We need to know that because that wouldn't be reported at the fund level under modified accrual, but we would want to know what that was under modified accrual. Okay, so what we do is we go through, and this example shows you a series of entries that would be made on a work paper of some sort of consolidating schedule, maybe a system where these entries are made, and then it generates a record as to what the entries were to convert the statements from the fund statements to the government-wide. Carmen, do you all use a particular software for that, or is it literally as crude as a worksheet, or?
Interesting question. Yeah, actually, we're looking into software right now, even as we speak. But currently, we use Word and Excel, and giant spreadsheets that we do these reconciliations on and work paper on.
But yeah, that's interesting because I helped develop, in fact, this material that ended up getting folded into the CPA material really came about because we were asked to do a CPE class that gave that level of detail. And the client that we prepared that material for on the CPE side of Becker, I've been involved with Becker for over 30 years now, um, almost 30 years, I guess. It'll be 30 years in June. But um, on the CPE side, they asked us to develop an example like this. And so Tom Cox, who works for Becker, developed it, and then I presented it in the video that we prepared. And they wanted us to do that because their staff were used to using the software, and they were saying, geez, we don't think they understand what's going on in the background. So you guys might have been able to show the auditors a thing or two as to how that information is put together. And I'm sure they take a look at some of the stuff you guys do too. So
Yeah.
we're taking sort of a 2009 approach, if you will, to this, and I'm sure there's some software that's more sophisticated. Did I cut you off, Carmen?
No, no, not at all. No, and we're just kind of at the early stages of looking into and going, we'll have to go through a process, yeah, to get
Right.
something, but yeah, thank you.
Okay, sure. Yeah. Okay, good. So let's just go ahead and take a look. And they've broken these into measurement focus differences versus consolidating differences. If somebody wanted to break them into categories, I guess you could use this kind of process, but they're pretty straightforward as to what it is we're doing, as long as you understand the differences between full accrual and modified accrual. So when we sit here and we look at, for example, the capital expenditures, and I circled that earlier, 480,000, to convert from modified accrual to full accrual, since purchase of equipment under full accrual is not an expenditure, we would credit the expenditure capital outlay and debit the capital asset account so that when we pull that across, and I'll show you the way the final product would look as you pull across the consolidating entries from the fund statements to government wide, we'd be reporting an asset as opposed to an expenditure. For the long-term debt, we saw that that was, and I'm not going to keep scrolling back and forth, guys, because I don't think you want to get dizzy. And you can download this and print it on your own if you wanted to go through step by step on your own later. But you can see that paying back of principal being treated as an expenditure under modified accrual. Well, payment of principal is not an expenditure under full accrual accounting. It would be what? A reduction of debt. So we credit the expenditure for the payment. We debit the long-term debt because we're paying down the debt when we make an expenditure to pay off principal. Going through, okay, the other financing sources. Again, I'm not going to keep scrolling back and forth because I don't want you to lose your mind here as I do that. But we would do what? We would debit the other financing sources. Remember, other financing sources like a non-operating revenue. Issuing debt is not a revenue at all under full accrual, so we would credit the long-term liability for that. Now we start using some of that other information up here where we had at the beginning of the year assets of 5 million, non-current liabilities of 3. So we go ahead and we're going to debit, okay, our capital assets for the 5, credit net position, because remember what? Assets minus liabilities generate net position. So if you increase your your non-current capital assets, then your net position is going to increase in order for the statement of net position to still balance, for the balance sheet to balance. Now we would have to pick up the accumulated depreciation on that existed at the beginning of the year. And again, that was provided in the other facts that we had accumulated depreciation of 1.5. So we pick that up. That's the accumulated depreciation that had existed at the beginning of the year. Accumulated depreciation is subtracted from our assets. So that, of course, would reduce our net position. So we debit net position. And then we go ahead and for our beginning liabilities, assets minus liabilities to decrease net position, you debit it. So we would debit net position, credit the non-current liabilities. Now, this one, And I thought to call Tom and ask him, well, how are we supposed to know that there was a difference between how the revenue was accounted for at the um, fund level versus the government-wide level? And they do show on the government-wide balance sheet, not government-wide, the fund balance sheet, they do show a deferred inflow of 50,000. And I guess what this entry is trying to say is, well, look, this would have been a deferred inflow um, for unavailable revenue at the fund level, but at the government-wide level, maybe it's one of those things where they've come in and they've said that you can't use the funds until the period begins, and we had already begun the period, and there was no collection that fell outside of 60. But for the fund level, the collection fell outside of, say, 60 days, so it would have been a deferred inflow at the fund level, but is going to be revenue at the government-wide level. And as I hear myself try to come up with an explanation, I see why Tom sidestepped trying to discuss that, because I guess he figured he'd do more harm than good on that. But for whatever reason, we needed to recognize the revenue at the fund level, I mean, at the government-wide level, but not the fund level. So we take it out of deferred inflow and put it into revenue for our government-wide. The accrual of that interest has to happen. So we debit interest expense, we credit the interest payable. Okay. And then we go ahead and we want to report the depreciation expense. So we go ahead and report it for each of our government programs. Remember, we're taking a program approach. Remember, we talked about public safety, I think was an example we used. So we put in the depreciation expense for each one of our government programs and credit the overall accumulated depreciation that would be reported on the balance sheet. That's for the expended depreciation expense for the current period, right? And then we would go ahead, and this entry is probably the more complicated one, okay? Because all we're doing here, guys, is we're now taking the internal service fund information and we want to consolidate it into the government-wide. So we're taking information now to fold it into the government-wide by debiting the cash investments for government-wide purposes, because we're not going to report a separate statement for our internal service funds. So we're essentially, in a way, eliminating the internal service fund and folding it into the governmental activities at the government-wide level. Okay. Now, where it gets a little interesting is we go ahead and we take the charge for services that would be reported at the internal service fund level, and we debit the expenses for the internal service fund. But when you think about that, you're like, well, that's kind of weird, because why are we taking, you know, expenses and revenues that are revenues that were generated from providing services from the same funds, the governmental funds that are reported in the governmental activities column? Well, don't worry, we're going to fix that. And we fix that by doing what? By then in the next entry, taking those revenues out, okay? Taking those expenses out, and then the difference between the internal service funds revenues and expenses is basically going to be a credit, and it'll be a credit taking out the profit portion of that amount that was included in the internal service funds expenses, because we're sitting there and saying, well, look, you can't have profit, by providing revenue to yourself unless you're some sort of shady kind of consolidation purposes, and we're not. So we go ahead, and by doing that, those set of entries right there, we are able to remove any inter fund profit. Okay. Then we go ahead and we simply eliminate, and they're calling them other eliminating entries, and it's really the interfund activity. And so we're removing due from, due to the between the um, various funds, and then we're removing the transfers in and the transfer out to eliminate those. And once you've done all that, okay, and you would do all that on a worksheet, I guess, something like this, or using a software, et cetera. And Tom did a really nice job sort of showing you, where those journal entries would fall on a worksheet. And at the end, you end up with a government-wide set of statements. And remember, we talked last time that we would need to provide, we've been talking about the reconciliation that would basically the two reconciliations, which would reconcile the fund balance to the net position and the change in fund balance to the change in net position for our operating statements. Okay. Question. Are any of you involved with this process? I know that I had asked that a couple times and I can't remember now if anyone had said they were or not. Okay. I'm sure it's more complex than this quick little example, but then again, we don't want to sit for 3 hours, for 3 days going through what the process might be. Is there a comment? No? Okay, good. So with that, if you want to, you can kind of, download that. It is on e-learning, so you can download it and kind of walk through a little slower if you want to absorb some more of that at your own pace. Okay, good. So let's go ahead. I think I can discard that. And let's see if I can get this to work for me. And it's probably not necessary for me to be able to write on this thing. I'd like to be able to, but it's not okay. See, it heard me. It doesn't care if I can write on it, so it goes ahead and let me write on it. 1 second, guys. I forgot my clicker. I do want to have that just to facilitate going from slide to slide. So 1 second. Okay, so as I mentioned, for chapter 10 now, we're taking a look at analysis of government financial performance, state and local government performance. As I'm going through this material, and it's pretty quick presentation here, because I'm not going to read through every ratio they give us. I think that would be deadly for us to just sit here and listen to every single ratio read out. But take a look, kind of think about this as we're going through, and maybe we can decide tonight, or if not tonight, maybe at some point next time, maybe after our guest speaker, we can have a little discussion about, instead of taking a final, which will involve taking multiple choice questions in the manner that we did with the first midterm, we will ask maybe a group of 6 people in each group or something, or 5 people in each group, maybe 5 groups, to pick a measure. I don't want everyone to do the same measure, so you'd have to make your decision and then work from there so we get different ones. But pick a measure and apply it to the annual comprehensive financial report for the city and county and see what sort of findings you come up with. And then our last class will be each group presenting what their findings were. I like that because I get to learn something too from that. And you might like that because then you don't have to do the final. Instead, we'll just talk about the not-for-profit information, but we won't be necessarily tested on it. Okay. Okay, good. So let's go ahead then and let's just take a look. And there are two documents that were prepared by the Government Accounting Standards Board. And I thought about it a little late this afternoon. I'm going to look to see if I can find those documents, see if they're publicly available. And if I can find them and they're publicly available, I'll post them up. Carmen, do you know if you all have these documents available for folks? It's the what you should know about your local government's finances and an analyst guide.
Um, we do not have them in our office.
Yeah.
So no, I would say no for us. They could be
Okay.
somewhere else, but
Let me take a look. Sometimes Gatsby likes to charge people for this stuff, which I find annoying, but it is what it is. I can't control these kinds of things. And so, but if I can find them, I'll post them up under chapter 10, just so if somebody wants a more detailed discussion, they can look. Okay. But
yeah,
huh?
I said, yeah, that sounds good.
Yeah, but I just went ahead and used, what the textbook had. This is from McGraw-Hill. Okay, so you can see that there are different focuses and very similar for the first two that you might see, for a any company, financial position, short-term concept that focuses into cash and near term liabilities and whatnot. Financial condition, okay, looking at the capacity to meet service obligations, something that doesn't necessarily manifest itself so much when you're looking at a company's financial statements. But for government, economic condition is a key factor because, of course, if there is an economic downturn, and you start having recession and you start having layoffs for um, you know um, across different sectors, and then folks start not being able to pay their property taxes and whatnot. It has that sort of ripple effect. So it would be important to consider economic factors, right, because of the impact on the government entity itself. Okay. Decided to take a snooze on me here. 1 second, guys. Always something. I guess I have to do it this way. So we can see that the different factors that affect the economic condition, financial position, the fiscal capacity, the service capacity. Okay. And then financial trend monitoring system was developed by the International City County Management Association. Is this an entity that you all are familiar with, the financial trend monitoring system? Okay. Looking at a longitudinal approach as things change over time, right? And so you can keep track of your financial performance, looking at environmental factors, organizational factors, and then we're going to have quite a bit of discussion on the financial factors. Okay. Now, as we look at the community needs, there are various factors, age, right? And that's becoming more and more of an issue as we have the baby boomers now starting to get into, period where we're going to start drawing on certain benefits and whatnot, like, Medicare, Medi-Cal, or Social Security, those sorts of things. Income levels, okay, property values, right? Population density, employment factors, all of these business activity factor into the needs of the community. Intergovernmental constraints. And, I try not to watch the news, but they don't let us take our eyes off of what's happening at the federal level. And of course, that has a rippling effect to the state and then to lower levels of government. So that's not a whole lot of good news coming these days in that area. Disaster risk. big deal in the Bay Area, of course, is what is earthquake, right? And what are some of the disaster recoveries? And again, I sometimes think I'm watching a nightmare when I see what's going on at the federal level. Um, they're talking about eliminating FEMA now. And so I look at that and I'm like, well, how's that going to work? I mean, that's why you have a federal government to help with its infrastructure and its capacity, its resources to, mobilize on huge events. Okay. But again, we're looking at the local preparedness there. But, we do look to the federal government to be there for giant things like, disease, pestilence, disasters. Okay. And they seem to want to be checking out of that business too. But let me stop. Political culture, sort of along the lines of what I'm talking about. I mean, attitude towards taxes, this anti-tax sort of posture that we've been in the United States for some times. Attitudes towards services. One of the things that I consider as the baby boomers get older and older and more of us go to the big benefit, we start collecting our benefits in the sky, um, there'll be less and less baby boomers left to say, hey, we need to protect things like Social Security and whatnot and Medicare. And so that could shift attitudes to things that have long been accepted as, things that will be maintained and is something that maybe would be affected. And so I'm really kind of talking about political process there a little bit. Inflation, what's happening with markets, okay, what's happening with employment levels, all of these things, even though they would affect a company, I think we go a little further in consideration of those when we're talking about a state and local government because of its connection to providing services and helping to remedy some of the bads that can come from some of the problems with inflation and markets and unemployment, et cetera. Okay. Organizational factors, management practices, and the legislative process. Okay. When we look at revenues, what is the growth of those revenues? What is the dependability of those revenues? If we're going to be getting into declining property values, what could be some of the potential effects? You look at the economic conditions and outlook. And again, we're going to get to some of the ratios and whatnot. But remember, I mentioned that you would also look to the MD&A. And remember, we talked about economic conditions and outlook. And for a city, one of the major things would be property values, since the property taxes are a major source of revenue. And as property values decline, or as values of homes decline and people start maybe defaulting on their property taxes, what would be the economic impact of that? Same thing with expenditures, okay? Is there growth? And growth and expenditures can come from a variety of sources. Again, growth in the payments as we have an aging workforce, we have an aging society, some of those payments for various benefits. Again, the priorities associated with that. Mandated cost, I mean, that's a big thing that's talked about at the federal government. Most of the expenses of the federal government, expenditures of the federal government are mandated things for things like Social Security, Medicare, those sort of requirements. Very few are discretionary. The big discretionary thing at the federal level is the defense budget, and I don't see any discussion at all at trying to cut the defense budget. And so I find that kind of a little interesting that they're starting to go look more at the discretionary mandatory spending and not spending time with some of the more discretionary things that they could. And again, they keep talking about cuts, and I know, forgive me, guys, I worked for the federal government for years, so I have a little bit of a bias there, but they keep talking about expenditures, but they could be talking about revenue and generating revenue from certain sources that they're not now, but they don't really seem to have an appetite for that. What is the operating position? Okay. Operating results, the fund balances that are associated. Okay. Is there certain liquidities? And we'll take a look at some of the ratios around some of these things here. Short-term debt, overlapping debt is debt that overlaps between different jurisdictions, different levels of government. Okay. Long-term debt versus short-term debt, et cetera. All of these things are things that you might look at, in any company. Um, because so many state and local governments still provide a defined benefit pension plan, then there would be things like, unfunded liabilities. What are the assets? What are the obligations for pension? And then post-employment benefits. I think for most governments, that's state and local governments, you're all CalPERS, right? Am I
No,
right?
not all CalPERS. We have some CalPERS, and then we have our own retirement system
Oh,
as
okay.
well. We're both.
Okay.
Mhm.
Okay. So that would be consideration, right? For the city. So, okay, good. Okay. And then, they say condition of plant. We're really talking about our infrastructure assets to a large extent there. Do we have some big infrastructure improvement or maintenance or development that's going to have to be done? And how would that affect the financial condition of the entity? So this is where we start, guys, getting into ratios, and I don't want to sit here and read every single ratio off to you. I think that would get a bit daunting for us. Okay. But you can see some of these, general fund operating surplus deficit. That one I picked up off of remember we had the excess of revenues over expenditures. So I'm thinking you'd pick that off of the statement of revenues, expenditures, and change in fund balance versus operating revenues, liquidity, short-term investments, current liabilities, really all we report for our governmental funds. Notice we're talking about governmental funds here. Okay, our debt service, principal and interest payment of debt versus the general fund operating revenue. Again, not considering other financing sources and uses, right? And so forth. And you can see some of the different things that we would use for our governmental fund, for our government-wide statements. Okay. Interperiod equity. Okay. Interperiod equity really is saying, hey, are we accumulating debt that's going to have to be picked up by future generations? With a balanced budget, that's not as much of an issue as it would be, say, at the federal level, where we keep accumulating debt period after period. Business type activity, self-sufficiency, which we've abbreviated BTA here, BTA service charge revenue. Remember, we have on our statement of revenues, expenses, and changes in fund net position for our business, for our enterprise funds, we report operating revenue, okay, versus the expenses. Okay. And again, I don't want to read every single one of these. I think you can see some of these things. Some of these things like population would likely need to be pulled out of something perhaps other than the annual comprehensive financial report, although I don't know to what extent you might find some of these measures or some of these some of the information for these measures or the measures actually done in the statistical section. Remember that last part of the annual comprehensive financial report, the statistical section might have a lot of the information that you would use to answer some of these things if you chose one of these.
Yes, it does.
Is that where it
In
is?
the stats, yeah.
Okay. Okay, good. And by the way, guys, if we choose to do this as sort of a final project, I'm not against you saying, hey, look, we looked at the annual comprehensive financial report and we found a discussion that, really explains what's going on with this. That's fine. I'm not saying, hey, write something new that isn't there. If you want to share with us what the city's already provided, I'm more than interested in that. Signals of fiscal distress. I've mentioned declines in property values, decline in economic value, economic activity, erosion in capital, and they're talking about capital plan. Oh, there they say particularly infrastructure. Yeah, that would be the big one because that's going to be large ticket expenditures that are going to have to be made. Okay. Um, Taking a look, trends. Okay. Longitudinal data. And again, that statistical section sometimes goes back 10 years. So that might be rich with a lot of information there. And then I thought, comparable governments might be an interesting benchmark to see. And maybe as part of your discussion, you might say, well, we looked at, I don't know, there is no city similar to San Francisco in my mind. Maybe, but Seattle tries to be San Francisco sometimes. I was there in what year was it? I think it was 90, no, it might have been 2000 already. I forget exactly. Maybe it was 2001 when they had an earthquake up there. And lucky me, I get to travel from the San Francisco Bay Area to Seattle to get stuck in a 6.9 earthquake that is not the largest earthquake I've ever been in, but it's the longest. So that thing went for 30 seconds. And let me tell you, that's a scary 30 seconds. But what was annoying about it is, we're like San Francisco now. And I'm like, okay. 1906 was 8.3. Okay, which every point on the Richter scales, I'm sure you're aware, is 100 points higher than the last point. And it lasted for 45 seconds, not 30 seconds. So that extra 15 seconds can do a lot of additional damage. But anyway, I don't know what city would be comparable to San Francisco in the Bay Area and by the way, um, you know, I think it would be interesting. Don't be shy if you have other insights of other cities that might say why they're not comparable. That might be kind of an interesting comparison as well. Um, Bond rating agencies, you might find some information because the cities, unlike the federal government, does get a bond rating. It's a little questionable to me. Like Standard and Poor's downgraded federal debt at one point in time, and I'm always like, if the federal government defaulted on its debt, you can throw all this away. I mean, I don't know what the financing mechanisms in this country would be anymore if the federal government defaulted on its debt. And when they start talking about the debt ceiling, they always, uh, some people, I'd say they got invaded by aliens in their mind, the body snatchers or something, because they sit there and they'll say, well, the federal government could default on its debt. And I'm like, how? How would that work? If you look at the capital asset pricing model, they start with a risk-free rate of debt, which is the federal debt rate, the federal interest rate. So I don't even know how you would go from there for the rest of these. But every now and then, Standard and Poor's will downgrade the federal. For the state and local, it is much more relevant because those securities would trade and would be affected if there was some sort of downturn in the ratings and in their ability to raise capital. Federal government, I mean, they run deficits period after period after period. They have this huge debt, and yet every Tuesday, people show up to bid on Treasury securities because they know that that's a safe place to park their cash. And so it's a little different at the federal level, but for state and local, it is relevant. They do rate those. And then there are essentially um, underwriters for state and local bonds that would use this kind of information. So there is stuff that's out there that you may want to pull into your discussion as well. Okay. Thoughts, questions, thoughts on the idea of doing a final exam, looking at not-for-profit versus a final project. in which I guess maybe 5 teams of five, made up of 5 individuals from each team, 4 or 5 individuals from each team would pick a measure. You'd have to submit that to me so I can let everybody know. Hey, what I would do is I would put out an announcement on e-learning saying, hey, debt per capita, revenue per capita is off the table. Somebody selected that. Whatever is off the table, somebody selected that one, and so forth. And then you'd have to bid which one you want, so that then you're assigned that one for your group. And I guess I'd have to make the groups first before we could do that part if we want to do this. But I would make up the groups, and then each group, group 1, group 2 through 5, would submit their choice. And then each group would talk about one or more measure. If you want to talk about more than one, you're more than welcome to do that too. Thoughts?
I like discussing the measures. I think that's a good idea.
Okay, thanks, Michael. Any objections? Okay, I think that would be cool. I would enjoy hearing that. And I'm always humbled by, the job that my classes do on my dumb little projects. So let me go ahead. We'll probably use the same groups we used before, I guess. But I'll reiterate who was in what group, and I'll post that up, and then each group can choose. And then on the date of our final, each group will spend, let's just say, maybe, Michael, you think you could generate 10 minutes worth of discussion on those?
I think so.
You think that's reasonable? Okay. Okay, so we'll do 10 minutes per group. If you want more, that's fine, but yeah, I wouldn't expect you to do more than 10 minutes. Or I wouldn't expect you to do less than 10 minutes. Anyway, you know what I mean, about 10 minutes. I'm not going to sit here with a stopwatch. And I'm not going to have a rubric. There's not things, hey, you have to cover this, you have to cover that. It'll just be a nice chance for us to kind of hear from each other and learn from each other. Okay, guys, anything else?
Oh, I have a question.
Yeah, sure, Mary.
Um, when when do we need to pick the measure by?
Well, I see it as a bidding process to a certain extent. So the sooner you pick the measure, the better chance you have of getting the one you want, right?
Okay, so
I
we
mean, you can walk in the day of as long as you don't pick a measure that somebody else has picked. But my point being, if let's say Michael's group, Michael, if I may use you an example, picks revenue per capita, just to pick something out of the air. Well, now you can't pick that one because their group has picked it. So now you're going to have to choose one of the others and so forth. And if you want to wait until the day of, well, I guess everybody would have to pick something, or everyone could walk in the day of with the same measure, right? I don't know. It's pretty soon. I don't know. I have to first put together the groups, right? But we'll say probably by next week. Let's just do that. Once I've assigned the groups, then we'll say by next week have something picked. I'll have the groups by next week. We'll pick by the week after that. How about that? Let me see.
Sounds good.
We get out of this. I'm just going to look at the syllabus just to make sure I'm not backing myself into some unbackoutable corner. Let me see. That's not you guys. Oh, da, da, da. Well, I'll tell you what, let's do this. First off, these were our groups, right? So we're going to stick with these groups, and I'll repost this up. But this was the group for the test, so let's just do these same groups again for the project here. So I guess we'll have 4 groups instead of what I say 5. We'll have 4 groups. Okay, guys? I'll post this up again, but this is your group. Can you see that up on the screen?
Yes. Oh, and can you add me to group 4? I just joined group 4 last time. Just
Sure.
Carmen, sorry.
Yeah, Carmen, you're in group 4. I'll add you.
Okay,
Yeah,
thank
you're in.
you.
Yep, thank you. So that'll be the groups, and I'll post this up. And let's say we have the measure, we have you pick the measure by. Next class, we're having guest speaker. Yeah. So as we start the discussion of not-for-profit, so everybody will have to choose their measure by 4-3. And then that gives you a couple weeks to work on it. Yeah?
Okay.
Okay. If you want to pick it before, then you can. So I'll post up in the announcements, I'll post up what this project is supposed to be. Pick a measure, pick it by a certain date. Here's your group. And that'll be up there, pretty quickly on e-learning under the announcements. Sound like a plan, guys?
Yes, thank you.
Okay, so Carmen, Carmen, we're good for next week, guest speaker.
Yes, I emailed you.
Um, and you said I can invite others to the meeting?
Yes, I mentioned that you might do that if you have some members of your other classes or accounting groups. Yeah, that's
Okay.
totally fine.
What
Thank
I'm
you.
gonna do, if you don't mind, not only will I invite Golden Gate, I will probably alert Deanza College about that. Are you interested in having them show up?
Oh, sure, yeah, and the more the merrier. Because it helps us to put out the word about our accounting intern program.
Right, right. And as we mentioned last time, I used to have them come and speak to my class at San Francisco and San Jose State. So I think it's a
Mhm.
good presentation. Okay.
Thank
All right,
you.
guys.
Question?
Uh-huh. Yes, Mary.
Oh, it's about chapter 6, one of chapter 6 practice midterm questions.
No, I kind of asked you to see me
Right.
offline about that. Yeah, I don't want to drag everybody through that because we've kind of moved on from that material. But yeah, unless everybody wants to hear it. How many questions do you have?
Oh, just one.
Oh, just one?
Okay.
Just one? Okay, hang on a minute.
Oh, today I have one. I might have more maybe a few
Okay.
days later.
Okay. Well, let me put that up since you say it just one. I just didn't want to, everybody's got one foot out the door and the other one on a banana peel, and then we start rolling through 50 questions. But let's go ahead. Which one?
Oh, number 3. Did we provide an example of this one? I'm not sure if I recall.
Um, bleh. We did not in chapter 6. We did in chapter 5. Remember in chapter 5, and let me go ahead and put that slide back up. When we were talking about capital project fund and there was debt that was issued for the capital project in chapter 5, and when we issued those bonds, we issued them at a surplus. If I'm remembering that example correctly, and please God, don't ask me why I remember the detail of the slide to this level of specificity, but uh, they issued these bonds at a premium because they issued them at 101. So there's a $50,000 premium. And notice they set up that premium as being due to the debt service fund. And generally, what happens with a debt covenant, it says any premiums or unused debt proceeds are to be used to the protection of bondholders, which is a sort of legalese for transfer to the debt service fund, so that that money is then available to pay the principal and interest as it comes due on this general obligation debt. So that question, even though it was asking from the context of debt and debt service, and when we studied it, we studied it in the context of Chapter 5 Capital Project Fund. It is correct that premium is generally transferred to the debt service fund. So we studied it in Chapter 5, not 6, but we did have that example.
Oh, okay. So it's like what we owe to the bondholders. So that's why it's debt service.
It goes over to debt service fund, and remember I did like a bunch of T accounts, and remember that 50,000. I want to say, um, yeah, I showed that 50,000 coming out of the cash of the capital project fund, and then in the debt service, so they would then debit the due to debt service fund account that you saw there in that journal entry on the chapter 5 slides. Okay. And they would credit the cash as that cash goes out of the capital project fund in the debt service fund. There would be a other financing sources transferred in, credit, and a debit to the cash. And now the debt service fund has that cash, and they can then use that cash, and it would be restricted, but for payment of principal and interest on the general obligation debt. Now, another way of doing this in FASB, I mean, GASB is not, I don't think they're real specific on, journal entries for transactions at this level. So another way to affect this would be to simply put the other financing sources proceeds of bond at 5 million, and then create other financing sources um, for the 50,000 of premium, and then transfer that money out of the capital project fund by debiting other financing uses, crediting the cash transfer out. And then in the debt service fund, the debt service fund would see a debit to cash and a credit to other financing sources transfer in. Another way to deal with it would simply to have that count entirely as an other financing source of the debt service fund, and it wouldn't even touch, the premium wouldn't even touch the capital project fund. So there are different ways to ultimately get that money over to the debt service fund, which I think that's what was contemplated in this question here, that ultimately it's transferred either through a transfer in process that I described, the due to process that we saw on that slide, or it doesn't even hit the capital project fund. It just goes straight over. But this contemplated it being issued, the premium being issued by the capital project fund, but you could do it where it goes straight into the debt service fund, the premium. Carmen, does San Francisco have a choice on that? Because I've seen it done in different literatures, different ways. And when I've asked somebody to pin it down, they're always like, I don't know, John. They're all good ways of getting it over to the debt service fund.
I think we just transfer it to the debt service fund.
Other financing uses transfer out, debit, credit, cash.
Yes.
Yeah. Yeah. And that would be a perfectly acceptable way of doing it. Or if you hadn't sent the cash right away, you could set up a due to, debit other financing sources, transfer out, credit due to debt service fund, and then later debit the due to and credit the cash to send it over.
Yeah,
You know,
actually, yeah. And you know what? It also might depend on whether it is what the purpose of the bond sales would be, because there may be instances where, depending on what the bond statement says, that it could go even to a project, right? If it allowed for that. In other words, if the debt offering said, oh, if you have a premium, that could be used. I don't know how often that happens, but I think in general, it's transferred to the debt service fund.
So it has some kind of uh, could you use a premium for projects not called out in the debt covenant? Does it ever work that way? In other words, it almost becomes a general fund. Well, I guess
Oh,
it would still have to be a
no,
capital project.
yeah, no, we wouldn't never probably send
Ye-
it to the general
Yeah,
fund. Yeah, yeah,
yeah, that wouldn't fly. That would
yeah.
get funky pretty quickly. Yeah.
That might be a problem, yeah.
Yeah. Yeah, no, I could see that that would be rot. I mean, the one that used to bother me, and this was in the 90s, I think it was the early middle 90s, and it was part of this whole tough on crime thing that, they had a period there where we're gonna be tough on crime. And I remember there was a guy that was running for the insurance commissioner, and whatever his name was. It was when they first started because before there was no Department of Insurance in the state of California. And so they developed this in the wake of some insurance company scandals like Pacific Life and some of those. So they created this insurance commissioner, and then it was first someone who was appointed, and then it became an elected office. And the guy that was running, one of the guys, he didn't win. I think he got beat by Garamendi. I think Garamendi ended up being the first insurance commissioner. Anyway, the guy kept saying, vote for Joe Taglioni, whatever his name is. He's tough on crime. And I'm like, well, I want him to be tough on insurance companies. I don't need him to be tough on crime unless the insurance companies are committing crimes, but I don't think that's what they meant. But and it was this part of this whole big tough on crime thing. And during that time, there became this fetish with issuing bonds to finance the construction of prisons. So now we're issuing long-term debt to construct a prison, of which the principal and interest will have to be paid back. And the way it's going to be paid back is by general revenue. So the general fund going to have to transfer money out of the general fund into the debt service fund to pay off the principal and interest on these debts that we're using to construct prisons. And so we're going to take money away from other public services like, say, education to, construct prisons. So I guess if you stop spending money on education, you might actually need the prison. So maybe somehow it had a bizarre sense, perverse outcome like that. But then the more annoying thing is when they start paying, private corporations to run the prisons. And so that gets even more uh, upsetting for some people. But anyway, um, but I tend to ramble, so forgive me. Question?
Hello, John. Just a quick question. The measures are presented on the slides 19, 20, 21, or is it just beyond what is specifically called measure? Because there are different ratios. Mhm.
1 second, let me go back. I think I closed that. So we're seeing what we're. So we've got 19, 20, 21. No, any of these, 22. So
Mhm.
I'm kind of calling them all measures.
Okay, thank you.
So any of these so pick one of these, I guess, or more in here. And then the way I'm seeing, who asked the question?
Gulnar?
Hi, Golner. Yeah. And then I'm seeing some of these other things as sort of supplemental things you can bring in once you've picked the measure, such as, trend analysis, benchmarks. If you see other things that might be in that statistical section, et cetera, you're more than welcome, or in the MD&A, you're more than welcome to bring those things in.
Thank you. It's very helpful.
Yeah. We're good, guys?
I just want to confirm with the guest speaker, next week's class will be still virtual?
Yes. Yeah, I
Okay.
had offered potentially bringing that on campus, but I don't think it's convenient for folks. You know, as a student of Golden Gate, you have access to the campus. So if you want to go over there and hang around the hallways or whatever you want to do there's not much, to be honest with you. Don't tell them I said this, although I'll be posting this on YouTube, but there's not much in terms of facilities there that are a big deal. But maybe you want to get together with your group and you all want to sit down there at the campus. That section of Mission Street there between First and Second used to be kind of a little bit hopping. These days yeah, it's not what it used to be. So I don't know the big motivation to go down there, but if you wanted to, you'd be more than welcome. But no, we're not going to require it. It'll be on Zoom.
Okay, thank you.
At this link, same link for the class. You guys are, Carmen, Michael's okay with that, right? He can turn on it. He's got a camera and everything he can be using.
Oh, yes, yeah, and we have Zoom, so yeah, and I had assumed it would be on Zoom, so I had told him I would send him a link. So I was just thinking of sending him the link for, next week, so he can just jump on.
I think it'd be
5.
not, I know we're not requiring it, but for your colleague, it might be nice to turn your cameras on, kind of
Yeah,
make the
Could
guy
do that.
feel like he's wanted, appreciated. I'll have my camera on.
yeah, we can do that.
And check if it's okay, we record it too. That would be another question.
Oh, yeah, I'm sure he'll be fine, but yeah, sure, I can double check that with him.
Yeah, and then I might share it with Golden Gate. That might be something. So think about those things. Can I share it with my other classes at other institutions? Can we share it at Golden Gate?
Yeah, I think so. I mean, he's gonna be famous, but yeah.
Yeah. Oh yeah. I
Yeah,
always say
I'm gonna mention it to my boss too, because she's has been part of this program. She might wanna just jump on real quick and give a plug too, but I'll ask her.
he came to San Francisco State some years back.
Oh, Jocelyn?
Yeah, when I had
Yeah.
it. Yeah, I'm assuming you meant Jocelyn. Yeah. Several years back when we had it, when I had it there, she came. One year I had MGO come.
Mm-hmm.
They did a nice presentation too.
Yes, they're good present.
I think
they
I
do
had both of
presentations for us too.
I had both come one year. I had 2 guest speakers one year. I think both you guys came and they came.
Yeah, so I'll yeah, I mean, it would just be quick. Might even have one of our other people in this class speak out. Men, I'm talking to you. Just like if you people didn't mind, they could give some of their, just a quick 1 minute, I was in the program, I started in the program, and 20 years later, blah, blah, blah. There's men.
I'd love to, yes. And how did you know? Yes, I was in the program and 20 years later.
Yeah.
I'll do it, yes.
Yeah, thank you. Yeah, it's really a good program. And I'm sure we'd all love to. I actually was not, unfortunately, in the program. I wish I was. But yeah, I mean, everybody that's gone through the program, I just feel like it's really helped in the progression, of our whole city. So we
Yeah.
love to pitch it.
I mean, I would
Thank
hope
you.
there's some of my former students that went through the program after they heard the presentation, so that I'm somehow having some effect. I know that there was at least one student, Golden Gate, that went from Golden Gate that went through the program. I can't take credit for that because she's the reason I found out about the program, because she did it after taking this class, Accounting 304, back some years back. Took this class and then decided to get into governmental accounting.
Mm-hmm.
I will put up last week's lecture. I just haven't had a chance to do that yet, as well as this one.
And Carmen, please let me know, give me a cue when you want me to speak.
Yes, because I'm gonna, so Mike has his, and I think you, I'm not sure, Min, if you've ever seen his little presentation. You may not have, because I mean, he didn't do it a long time ago, 'cause he was in the program himself, but I know the last few years he's been in doing it. So that's sort of the act, like how to put together the act for kind of high level presentation. But in
They used
addition
to
to
have a
that,
video too.
oh, really? Of the
That
1549?
Yeah, that if you somehow want to try to play that video, well, what I'll do is I'll let you share screen when we do it in Zoom.
Okay.
And then I think whatever plays on your screen, we can see and hear.
Hmm.
So I don't know if you want to do, I'm not trying to drive the presentation, but there was a video. I'm just sharing that there was a video at one time.
Yeah, I don't think I ever knew about the video. So how
It was
interesting.
pretty cool, yeah. Because there was various people, although I don't know if the same chief financial officer that's featured in the video is still in that position, so that might be a problem. But anyway.
Hmm. Okay. Yeah, I'll ask Jocelyn if she knows about any video. But yeah, I'm not aware of one.
I know about it, but
Oh,
I
you
don't know
do?
if
Oh,
we
good.
still have it up on, on the internet somewhere. I can take a look.
Oh, cool.
I know that because I was in it.
You're in the video?
Yes.
Oh, wow. That's
A
amazing.
few of us.
Well,
Sam was in it. Olia Elise, do you remember her?
Yeah.
She was in it.
I
Okay.
remember in the video they mentioned Alex Ewan, who was the person teaching governmental accounting, and when he retired, I took it over for several years, and then they hired somebody that specialized in that area, and then they didn't want me to teach it anymore. But for a long time, well, I say a long time, for maybe 4 or 5 years, I taught the government accounting 504 at San Francisco State, and I would have you guys come and talk to those classes.
Oh, is that like an upper division at San Francisco State? Was it?
Yeah,
Oh,
504. It was an elective. I used to teach 2 sections every quarter because talk around the campfire was that if you took my class preparing for the CPA exam, the governmental accounting stuff was pretty easy for you. So I
right.
used to get a bunch of people lining up to take that class, but they hired somebody as Alex retired and I came in, but then they hired a full-time position and they were designated as the person that was supposed to teach that. So then it became a whole administrative thing. And so I slowly was phased out of that, teaching that. Uh, and then I started teaching it at San Jose State because San Jose State heard I was teaching it at San Francisco State and they needed somebody to pick it up there. And so I taught it there for several years, but then they started saying that they didn't want to offer it anymore because nobody was taking another elective class and they didn't think it was fair that everyone wanted to take my class and not that other person's class. So a
Oh,
little bit of the underbelly of, university politics. But anyway,
it's hard to find it as a class. I mean, that's why I think Jocelyn she actually went to San Francisco State, to City College, and to Golden Gate. And I
they
think,
they have it at San Francisco State, but I don't know that they would have the flexibility to do some of the things we're doing here as a state college,
yeah,
private college.
but that's why she ended up, I think, with you.
Yeah.
And
I'm usually the for people's last resort.
no,
That's all right, as long as
I think you were all there. She tried to do all three just to see, who was actually doing the class. So I guess so you're saying state still does a class.
Yeah, I'm
Maybe
pretty
they
sure
just
it. I'd be surprised if it's off the schedule now. San Jose State, I don't think they ever brought it back, which is
yeah,
weird.
and City College didn't bring it back. So yeah,
Yeah,
I don't know.
yeah.
Thank you for doing it here.
Oh well, hey, look, I'm the youngest of four. There was 2 years between my oldest brother, my second oldest brother, and my sister, and then I'm 5 years after.
Wow.
And so everybody used to say, "Well, you're an accident." And I used to say, well, I'm here now. So however I got here, I don't care.
Thanks for being here.
Yeah.
We appreciate it.
Sure. Okay, guys. Well, enjoy class, and I will post up this discussion of chapter 9 and 10, as well as last week's 6, 7, and 8. I saw a chat on that. So I'll put those up, and then I'll post up the guidelines with the group listings for the team project.
Thank you.
Okay, guys, have a good night.
Thank you.
Thank you.
Thank you.
Thank you, John.
Thank you.
Bye-bye.
Bye.
Bye.